Hello friends, Marv Eisen here from Timeless Dollar Trading Academy, and I want to use the example of trading on Tuesday, May 6th for a couple of things that I talk about in my trading course, Trading Mastery for Financial Freedom at timelessdollar.com. Now you're looking at my Taylor trading calculator, and on Tuesday I take the numbers that I calculate on Monday, and these are my numbers for Tuesday. 57.31, 56.77. Now you can get this trading calculator at my site at timelessdollar.com. These are numbers developed by George Taylor 80 years ago, and they're as relevant today than they were when George Taylor developed them. Now 57.31 and 56.76. These are the numbers that I developed, and of course I put in my previous day's close, 56.74, which unusually is not within the confines of the Taylor calculated area where prices are likely to trade. Prices closed the previous day on Monday right here at 56.73. Now the S&P E-minis trade throughout the day. They trade overnight. I am not interested in the overnight session, nor should you be, if you want to be a consistent trader. And when I say consistent, I don't mean make money all the time or trade every day. Here is the price just before 8 a.m. And I want to prove a point that I make in my trading course about where prices trade in relation to the previous day's close, which is an equilibrium price. Now, the fact that that prices are coming in way below the previous day's close is significant, and you should make note of this. Whenever the prices trade significantly below or above the previous day's close. And so I'm going to start my video with prices moving into the open, and here we are. Prices are continuing to go down, going up a little, and I'm going to stop it just where the market is opening. Right here, here is the 9:30 candle. 9:30 candle opens at 56.16. Okay, 56.16, previous day's close is at 56.73, and the trading area is calculated at up in this rectangular area. But we're more interested in where prices are, because price action is the key. And price action in relation to what? To what? So the what is, first of all, the previous day's close and the area where prices are likely to trade. Now, for those of you who've taken my course, wisely taken my course, you know that the trading zone is an area of where prices are likely to trade, but not necessarily bounded by the absolute support and resistance that's calculated. So we have to transpose it. Be that as it may, this is where prices opened up on Tuesday, May 6th, and this is the previous day's close. And I talk about the previous day's close a lot. And if you want to make money trading, watch this video, watch what happens, and I'll prove the point. I'm going to continue. Here, as the market opens, prices move up, they move down, then they move up again, and they break open, they test, and they break through the previous high right here that was put in at 942. Now, I've been making a lot of videos cautioning to be wary about trading and wait until 10:30 prior to making a trade. So 10:30 was right over here, the 10:30 candle. Let me move it over. Well, we're just about over there, 10:30. So this is where you make the trade. And notice that prices took out the high, and so the previous day's close equilibrium was up here. Up here being 56.74, and prices are 56.43, about a 30-point range, all right? Would you be happy with a 30-point trade? Forgetting about anything else, would you be happy with a 30-point trade? Okay, I think you would. So if you would be happy with a 30-point trade, look how the trade progressed the rest of the day after 10:30. Now remember, we're in 56.43. Set it and forget it. Have some faith. Okay, right here at 12:12. Prices just about kissed the previous close, all right? Came within a point or two of it, and that's where you get off, make your 30 points, go home. That's $1,500 on the E-mini. Would you be happy with a $1,500 trade? I think so. Trade safely, use lots of patience. Thanks for watching, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.